Today we're going to talk about high-income, high-net-worth audits, state and federal. Why do the taxing authorities flag complex returns, and how do you respond safely when they do? If you're a high-income, high-net-worth taxpayer, you're not just filing a larger return with more pages. You're filing a return with higher tax enforcement visibility, larger dollar amounts, complex entity structures, multi-state tax exposure, pass-through income, digital assets, cross-border activity. Each one of these fact patterns creates verification points. And the IRS no longer selects returns randomly. It selects based on AI analysis, understatement potential, and tax recovery potential. So why do high-income, high-net-worth returns receive priority? Well, high-income, high-net-worth enforcement is not about punishment. It's about recovery yield. A single high-income, high-net-worth return can involve multiple pass-through schedules, large partnership allocations, capital transactions, digital asset reporting, cross-entity flows. A lot of this the IRS can test through third-party reporting, such as W-2s, 1099s, brokerage records, bank data, platform reporting. When mismatches appear, the IRS doesn't automatically assume you made a mistake. It evaluates patterns of behavior. If the patterns repeat, the scrutiny expands across multiple tax years and across multiple related entities. How does the IRS go about selecting high-income, high-net-worth returns? The IRS uses layered selection systems. Not one of them is a trigger by itself. They use multiple channels. These include information matching programs, diff scoring systems, closely protected secrets there, risk classification tools, AI-driven analysis that's totally in the dark. They're not sharing how they're doing it. Large partnership compliance work streams. Selection is increasingly data-driven. Returns with high discrepancy potential, they rise to the top and get selected first. They look for large partnership structures with concentrated allocations. Often, those receive issue-focused planning. And once selected, the exam team frequently begins with objective documentation, not narrative explanation. So what's exam's priority indicators in high-income, high-net-worth cases? Well, the IRS doesn't publish a checklist, but we see patterns reoccurring all the time. The ones that are common with high-income, high-net-worth exam indicators include third-party mismatches, unexplained differences in income reporting, large partnership allocations, multiple entity structuring with unclear economic alignment among the entities, digital asset inconsistencies, cross-border transactions, and a big one these days is corporate aircraft or personal use asset issues. The IRS is really looking for luxury lifestyle signals they get from social media that don't reconcile with low amounts of reported income coupled with visible high net worth. And when it sees mismatch patterns, it often expands across multiple calendar tax years. 1 year under audit rarely stays 1 year under audit in these scenarios. So when does civil audit selection morph into criminal tax exposure? Well, high-income, high-net-worth exams remain civil most of the time, but criminal tax exposure can arise, especially when the records show willfulness, affirmative concealment of taxable income, false documentation, fabricated support, inconsistent timelines. The shift in an audit, it occurs not because of the income or net worth size, but because of conduct, especially conduct after an audit begins, like improvised explanations, backfiled records, conflicting narratives. Once the IRS begins tax fraud development procedures, their audit posture changes. and your communications and your representatives become part of the evidentiary record. California and other states also bring parallel exposure. High-income, high-net-worth federal audits frequently create separate state exposure. California, for example, often follows on federal adjustments. If your fact pattern touches California residency, California source income, pass-through structures connected to California, you could find yourself eventually facing parallel review. In any event, federal adjustments can become state leverage, which means your defense needs to be coordinated both federally and at the state level. So, how should you go about responding safely in high-income, high-net-worth audits? Well, you, more likely your representative, they must assume every issue will be verified through third-party data. Your defense must be document first, not narrative first. That means you need to reconcile objective records, align entity reporting, and most importantly, control communications, avoid speculative explanations. Whatever you do, do not reconstruct history, do not revise documentation. If there are potential tax fraud indicators in your fact pattern, the communications in your audit must be managed through privileged counsel. You need both attorney-client privilege and work product privilege. Here's the danger. A CPA, EA, or tax preparer alone cannot protect you if the case begins to shift between civil and criminal. Moreover, the original preparer cannot be trusted not to throw you under the bus to protect their reputation and stay out of jail themselves. So in closing, high-income, high-net-worth requires controlled strategy. High-income, high-net-worth does not create guilt by itself, but it does create federal and state scrutiny. When the IRS selects your return, it's testing patterns, structure, and consistency. If the exam winds up expanding across multiple tax years or across multiple entities, or if they start sending out third-party summons activity, you must control the record early. At the tax law offices of David W. Clausing, our dual-licensed tax attorneys and CPAs regularly manage high-income, high-net-worth civil and criminal tax exposure. We use a coordinated defense posture. If you've received an examination notice, if you're receiving expanding IDRs, if they're asking about multiple tax years, or they're drilling into your large partnerships, call 1-800-681-1295 or visit clausing-associates.com to schedule a confidential reduced-rate initial consultation today. Early attorney-led audit representation often determines whether a case stays civil all the way through and stays contained, or escalates criminally into a criminal tax investigation followed by a prosecution. To date, no single client we have ever represented in an audit has been criminally prosecuted. Call us today, you won't regret it.